It's Jay Meisler here, August 21st, 2014, current time 10:45 GMT with the daily Forex trading outlook. Now, we come off a day where the dollar in general gained against just about everything across the board. We know the reasons. Ultimately, it was the Fed minutes, which was the last trigger. And now we're facing a day where only one thing really matters, and the one question you should be asking, and that question is, will the market turn defensive ahead of Yellen speaking tomorrow? Typically it does. I think we have UK holiday on Monday, so there are reasons to turn defensive after running stops on the downside but not holding below 132.50 in the euro. So perhaps we see some a little book squaring, but that really does not change the overall picture, which unless US data turns soft, markets looking ahead to higher interest rates and a firmer dollar. Let's look at the euro dollar first. And it was the break here. I'm going to go through here. 132.75 and 134.75. Yesterday we broke the key 132.94 target. Took about a month to do it. So now if 132.94 can be established as resistance, next one is 131 around 05 or so. Make it figure to 5. So you can see it's been operating technically. When we broke this, we had one little brief blip for a day above it by 10 pips, and then we came down. So we'll see here to now if this level here can become resistance. If it does, it will encourage a move down to 131.05. Of course, 132 stands in the way, but that's the pivotal level. We're going to skip ahead now to the 1 hour chart, because 1 hour chart is quite interesting in one respect. Yesterday, there was a correction off of a 130, minor correction really, off of a 132.75 low, which is right here, this line over here. We got up here to 132.97. FOMC minutes came out. We broke lower. We extended it to low to overnight to 132.42, by the way, which is just a one, whatever there is, which is just a few, I think it was 132.41, which is just 4 pips above the S1 on today's daily pivot, which is 132.37. So pivots actually worked today. Yesterday actually we got down almost to S3, and that provided a floor. Today S1 seemed to provide a floor. So if you're looking for a level where there might be stops, it would be 132.97. We briefly got above this 132.75 level by 2 pips. No real stops to speak of. And then we've come back down into this range here. So we have U.S. data coming out today, a whole bunch of it. I think it's weekly jobless claims, existing home sales, Philly Fed. I think there's one other item there besides that. But those are the data coming out. Market may react to it, but in general, the market's going to be looking for dollar dips and euro blips to sell, and only above 132.97 we put it back into this range here, where 133.33 was the breakout level, and that really sums it up in a nutshell. You know, maybe we have some consolidation, maybe we have some defense ahead of Yellen. That remains to be seen, but I would suggest that the market for now may want to take a breather. You have to watch 132.50. It's going to be very important. But if we stay below 132.94 and it becomes resistance, then the next target is obvious at 131.03 with the psychological 132 standing in its way. Now, I wrote an article yesterday. It's called "Why Technicals Work." It may not be why you think it works, but certainly it is a reason technicals work. And if you can use this, and if you use charts, you should read this article. It's really worth it. It's my perspective on it, but it'll tell you why technicals work. So that's it for now. Good luck, good trading. Touch base tomorrow as the market looks ahead to Yellen.